Hey everyone, welcome back to the channel. Buckle up because today, we're diving into one of the spiciest stories. The stage is set for a trade drama unlike any we've seen in years. And the main players are none other than the United States of America and the Republic of India. In what some are calling an economic earthquake, President Donald Trump has slapped a staggering 50% tariff on a range of Indian imports, instantly turning decades of steadily growing trade relations into a potential battlefield. This isn't just a policy tweak buried in economic reports. This is a public declaration that the United States is willing to shake up the rules, even with one of its most important allies in the Indo-Pacific region. The suddenness of the move, paired with the complete suspension of any ongoing trade talks, signals that this isn't a temporary spat, it's the opening shot in what could become a full-blown trade war. To understand why this is such a big deal, you have to look at the relationship between the two countries. The US and India are the world's two largest democracies, each with vast populations, powerful militaries, and economies that have become deeply intertwined over the last 30 years. Since India's economic liberalization in the 1990s, American companies have poured investment into Indian markets, while US consumers and manufacturers have benefited from affordable goods and services sourced from India. Trade between the two nations was valued at over $190 billion in 2024, and the momentum seemed unstoppable until now. Trump's administration argues that the US has been on the losing end of an unfair deal, pointing to what they describe as high Indian tariffs on American products, restrictive digital trade policies, and weak protections for intellectual property. By imposing a sweeping 50% tariff on selected imports, the White House says it is leveling the playing field and protecting American jobs. The products targeted by these tariffs range from textiles, automotive parts, and steel to aluminum, and certain agricultural goods. The impact of this move will be felt on multiple levels. For U.S. businesses that rely on Indian raw materials or intermediate goods, production costs are set to rise dramatically. For American consumers, especially those shopping for affordable clothing, electronics, or specialty foods, prices could start creeping upward within weeks. Meanwhile, Indian exporters, particularly small and medium-sized businesses that depend heavily on the U.S. market, are suddenly staring at a wall that could shut them out of their most profitable overseas sales channels. India's response was swift and firm. Officials in New Delhi have labeled the tariffs unjustified and protectionist, with strong hints that countermeasures are on the table. Retaliation could come in the form of new duties on U.S. agricultural exports, technology products, or even certain luxury goods. Such a tit-for-tat strategy could escalate quickly, dragging more sectors into the dispute and creating ripple effects far beyond Washington and New Delhi. The risk here is that what begins as a trade disagreement could spiral into a diplomatic rift, weakening cooperation in other critical areas such as defense partnerships, technology sharing, and joint initiatives to counterbalance China's influence in Asia. One of the most puzzling aspects of this conflict is the strategic backdrop. India has been seen in Washington as a vital partner in efforts to maintain a balance of power in the Indo-Pacific, particularly as China expands its economic and military reach. The two nations have increased military cooperation, signed major defense agreements, and engaged in regular high-level dialogues. By alienating India with harsh economic measures, the U.S. risks undermining years of diplomatic progress and potentially nudging New Delhi toward closer ties with other major powers including Russia and China when it comes to trade. Such a shift could alter the geopolitical map in ways that work against American long-term interests. In the short term, the winners and losers of this policy are not as clear-cut as political rhetoric might suggest. On paper, U.S. manufacturers that compete with Indian imports could benefit, as higher prices for imported goods may push buyers toward domestically made products. However, This assumes that American companies can scale production quickly and competitively enough to fill the gap, a big assumption, especially in industries where India has established a global edge. On the other side, India's exporters stand to lose market share in the US, but some might pivot to Europe, the Middle East or Southeast Asia to cushion the blow. Meanwhile, countries like Vietnam and Bangladesh could swoop in to capture US import demand previously filled by India, turning this bilateral fight into an opportunity for third-party economies. Economists are already drawing comparisons to the US-China trade war of 2018-2020, which saw tariffs and counter-tariffs pile up over months, disrupting supply chains and shaking global markets. But there's a key difference. Unlike China, India shares democratic values and strategic goals with the US, making this clash as much about political signaling as economic leverage. Trump's team is likely betting that India will blink first, given its significant dependence on the US market for certain export categories. Yet history shows that India is not quick to concede under external pressure, especially when national pride and sovereignty are at stake. The timing of this trade escalation also matters. The global economy is still navigating inflationary pressures, uneven post-pandemic recoveries, and energy market volatility. Any disruption in a major trade relationship risks compounding these challenges. For US consumers, the most immediate effect will be price increases in certain product categories. For businesses on both sides, the uncertainty itself is damaging. When companies don't know what tariffs or regulations will be in place next quarter, they delay investments, slow hiring, and hold back on expansion plans. Looking ahead, there are a few possible scenarios. One is de-escalation. After a period of public posturing, the US and India could quietly reopen talks, reduce tariffs, and claim mutual victory for domestic audiences. Another is full escalation, with both sides expanding the list of taxed goods, dragging more industries into the crossfire. A third possibility is realignment, where trade flows shift permanently as companies adjust supply chains to avoid unpredictable tariff regimes. Each scenario carries different risks and opportunities, but what's clear is that the status quo steady growth in US-India trade is gone for now. For the average person, this might seem like something happening far away in the corridors of power, but the impact could hit home sooner than expected. That affordable cotton shirt you love? It might cost more next season. Your next smartphone or laptop? If it uses components sourced from India, prices could edge upward. Even certain foods and beverages could see a jump. And if you work in industries like manufacturing, agriculture, or shipping, these policy shifts could directly affect your job security and business prospects. Trade policy may seem abstract, but in an interconnected world, it's deeply personal. Politically, the move plays well to Trump's base, where standing up to unfair trade is seen as a sign of strength and independence. It feeds into a broader narrative of protecting American workers, rebuilding domestic industry, and refusing to be taken advantage of on the world stage. However, critics argue that the approach is short-sighted, risking long-term alliances for short-term political gain. They warn that once trust between trading partners is broken, it can take years or even decades to rebuild. In the case of India, the stakes are not just economic but strategic, making this a gamble with potentially far-reaching consequences. Historically, the US and India have had their share of trade disputes, from disagreements over agricultural subsidies to battles over intellectual property rights. But those disputes were usually contained and resolved through negotiation, often with compromises that allowed both sides to save face. What makes this moment different is the scale of the tariffs and the suspension of dialogue. In diplomacy, talking is often the safety valve that prevents conflict from boiling over. By shutting down talks, both nations are removing the main tool for de-escalation, increasing the risk that economic friction could bleed into other areas of the relationship. Ultimately, This story is still being written. In the coming weeks and months, we'll see whether cooler heads prevail or whether the US and India double down on confrontation. The choices made now will shape not only the future of their bilateral trade, but also their positions in the broader global order. If handled wisely, this could be a reset that leads to fairer, more balanced trade. If mishandled, it could be the beginning of a long, costly rift between two of the world's most important democracies. So, what do you think? Was the 50% tariff a bold, necessary move to protect American workers, or a dangerous escalation that risks alienating a key ally? Should India stand its ground or seek compromise? Let's get the conversation going in the comments below, because this isn't just a news headline, it's a glimpse into the future of global trade, and it's a future we all have a stake in. If you found this breakdown helpful, make sure to hit that like button, subscribe for more deep dives into global politics, and share this video so more people can join the discussion. The US-India trade story is still unfolding, and trust me, you're going to want to see how this one ends.